All right, Russell. Made this a little bit brighter for a reason. We kind of got a little extended, but largely this was a stronger. And now I call them zones. But to probably better understand it, areas of attention, right? Where those buyers and sellers. Is it there? Because YouTubers, they're not moving this. They're not going to hold up the Russell. This is other larger institutions, and what we're looking for is hopefully some still attention out there. Because again, it takes days or if not weeks to fill their positions of any normal size, and they use algos to fill in. Like here's your parameters. Start filling me at this price. It's not the super scalpers that just market buy and market sell all within a fraction of a second. So what we're trying to do is hopefully take advantage of that. If they were long before, maybe there's still some orders here. There's still some attention to go long here. Now, I will say market is in an absolute sell-off mode. And I meant what I said in my last video of don't be the reason why I'm going over what a rip your face off rally is. Volatility is still high. Before we get to these futures, let's pull up the VIX. So VIX, yeah, gapped up, sold off. Cool. What is that? A dip buy for anybody buying the futures contracts? Shout out to anybody that's buying those. Those are not cheap. $12,000 for one contract. Not exactly your Robinhood players. But the volatility VIX, the volatility of the volatility is also starting to turn that thing around. Now, again, I look at this as a light switch because, like I said, stock market's always going up and down. That's not sarcasm. It's just kind of how it is. That is the name of the game. But when this thing is up there, that next green or red candle, it's just a tad bit bigger, right? So you need to price that in. As far as allocation wise, yes, you could spend the same and make so much more or lose so much more. But when volatility gets high, you get this special gift of you get to spend less and make the same or risk less. So it's kind of cool. If you are going to catch that knife, it's a better opportunity, I think. And I hesitate to say that because that's could lead into some bad habits. Let me just start catching knives when volatility is high. But because things are moving so much more, this is when things liven up. This is exactly what I mean by this thing's going to go up or down. And what I don't want to answer is, what should I do with this position? Well, I went long, and what you actually just told me is I didn't actually have a plan. I clicked the buy button on a few things. Holy cow, I'm really red, and I'm about to have a knee-jerk reaction and sell this while I'm down. And is that a good plan, or should I just continue to hold, or should I double down? Which is the literal equivalent of getting mugged in an alleyway. Says, give me your wallet, and you say, but wait, there's more. I have an iPhone 15 in my left pocket. Did you want that too? So maybe we just don't do that. Again, right now, green, hopefully it holds. I think right now we probably will see more of a relief rally this week, which does suck because I tried catching the knife last week, full blown, just a loss. I did do short dated options, call options on Qs and SPY. Just didn't pan out. And I bet if I just give it an extra week, I might have actually made something on those because I do bet we start to bounce. Expected moves. For everyone that has my charts, I'm going to actually update that in the next video for the mentorship. So these are not. This is last week's expected moves. I can actually toss these out. As far as IWM, we got 198.02. Hang on, I'll get that out of here. 198.02. All right, 188.26. I do like to manually draw these in. So again, this is where market makers kind of hedge their risk for whatever reason, right? You think it's going to go up, down, whatever someone told you on Facebook. Your wife's boyfriend, he knows something. Okay, all of those people have bought their call options, their shares. Everything is accounted and hedged for, and that's what we're saying. So if there's going to be any real surprise, it's going to break above and below that. These are not support and resistance levels, but you will watch. You'll watch some interaction at these levels. So again, don't confuse that with support and resistance. Looks like tech is an absolute melt mode. As far as a pullback goes, so we haven't reached correction territory. This right here, getting to this level, let's just toss that out there. This level right here will be official correction territory. Maybe we'll see that in the news. What should we do? Let's go green. We're gonna do green. All right. At that point, remember, pullback 1 to 9%, correction 10 to 19%, a crash 20% or more. And like I said before, I am just 1,000% on board that we at least get to that. I wonder if we flirt with that or turn just before that, but I think bare minimum we at least get that. It being an election year, and I do think they want to start to pad the markets soon. Whatever the leading excuse will be, I think buying does come soon. When we get to these levels, if those of you guys that are following on the Patreon account, the growth account, I will be buying a lot right here. Is this where you buy rain or shine? It's where I will be buying shares. And like I've told you guys, I've sold a lot of puts, which means I am collecting a lot. Well, I'm collecting premium, but also at that point, I'm going to start hoarding shares. Anything I sell a put on, I will collect those shares and I will hold those. And like I've said throughout all these streams, it's going to be like a 2023 marriage. Now they might not last very long, but at some point I'm going to say till death do us part. It's going to last at least 6 months to a year. I'm going to hold on to that probably the remainder of this year because I don't think the selling is done. But whatever I'm selling puts on is something I'm going to have. It's things that I do think will recover. So we'll see how that plays out. Whether you want to agree with that or not, I'm literally going to jump into that fire, and hopefully my little heat blanket that I got out of a little pouch that big can hold it off for a little bit. You sold 100% of Bitcoin. No. If you've ever watched any of my videos, I don't trade Bitcoin. I might sell some at the 100K mark if I see another pump. Right now, I'm not selling. All I'm doing is buying. Up or down, still buying. Man. So when we get into the earnings coming up, I think we might actually have to double back to the NASDAQ because it is basically AI earnings week outside of NVIDIA, one of your biggest players. But we have some bigger players doing earnings this week. As far as the Qs, 425, 425, 58. All right, and then we got 403.72. Now we're pricing in a decent move this week, so it would be rather shocking to see us actually break that down. What I'm thinking about, what I'm considering doing, and I'll probably have to do this in the NQ in the futures market. I'll probably collect a little bit more. But if I didn't have access to futures, and maybe all I have is a Robinhood account, I would consider selling the 400 to 398 put spreads. That is a bullish play, saying we're going to hold right here. Careful with that allocation because you're going to collect $20, risking 180. And if it blasts right through, you might think that's an easy $20. But if it blasts right through that, you'll realize just how much you had allocated out there. But after last week's sell-off, the cool thing about breaking moves, expected moves, is you catch people off guard one time. A lot of times we price that volatility in the following week. And at that point, it tends to make these a little bit safer. For you guys that have been following me for a while, I had a trading bot, and it had sold iron condors 1.5 standard deviations. It was the one thing I wanted to make that didn't have to be adjusted and jacked with all the time. And that was the best I could come up with my little brain. Let's clear this up a little bit. All right, now as far as the S&P goes, we got, let's put our green line right there. There is our, now this is a weekly zone, which is why I drew it in those pink instead of just having a pink box. I just did the lines. If that's confusing, some people already have got that confused. We'll just switch that. All right. There is your correction territory. Oh, we just tagged 5%. We're about halfway there. So the real question is, when do we get there? Do we get there? We've seen the S&P pull off these just sideways markets with incredible ranges. For anybody day trading, short-term trading, a lot of money to be made in there, but they take just some time off the clock. And eventually you see something like this just catch back up. We get a little excited, starts to go sideways. This starts to creep up, much like your indicators that went from overbought, start to cool off. Everything starts to cool off, and then we catch back up, and then it sends it again. But again, volatility as high as it is, we hit that zone. Currently right now we're bouncing, but I gotta say, if I was a bear and I got short right there, my head's in the way, just Imagine I went short right here or right here. Now, imagine I knew the answers. I said, "Hey, guys, uh, you got to go short. It's going to go 10% down, but there's going to be a bounce right here." How many of you guys would even worry about a green candle right now? Look at how much you are up. Let's just say SPY shares, let alone ES futures contracts. You got to handle that little bounce. That's literally nothing. Negligible. We haven't even broken any trend. The daily trend still down. Your 4-hour trend barely chopping around sideways. Sideways does not mean up. It just means not down as fast. So right now, whole lot of nothing to be catching that knife on. But that being said, we could just play this range. We could bounce up. I'd be very careful allocation wise. And if we do get that rip your face off rally, that's where I really want to go short. Even all last week, I was bearish, but I wanted a good short position. And I feel like the markets, someone is subscribed to me, and they would not let that happen. All right, Don's about to go. Don's going to go short if it goes any higher. Nah, just market sell this thing right now and send it even higher. I got to say, the people in my group, and I know this sounds cheesy, special shout out to you guys because they are shorts. They're just playing the trend. Absolutely, utterly killing it right now. They're putting up, not that it's ever a competition, but they're definitely putting up more numbers than I am. Uh, Pretty easy when it's a red day. I should have thought about that. But no, I don't know. Rip your face off rally, and I am going short. I hate going short at the bottom. And that's kind of what I meant to say in my last video is that we're selling off, play that trend, but inside that trend and volatility picking up, the green candles, they just come out of nowhere. I mean, it's like a lightning strike. And that's why it has the name Rip Your Face Off Rally. You go loading up short because this scared you. And now you're talking real trouble. And then it just sent it right on top of that. And then you tag out, which makes it even further. The buy the dip crowd shows up talking about market highs. It pops up, and then everybody just piles in short again until that trend changes. So for this trend to change, guys, we need to push up, pull back, make that higher low somewhere. Maybe breaks above this zone, pulls back, holds this zone, pushes up, higher high. At that point, you're officially talking about. Let's just put that back up. A trend change. But until then, you're throwing darts.